is Friday. It is July 24th, and of course, this is the video log that takes 30,000 to a million. And today, upon request on one of the commentors, I'm going to be sharing 4 of my most important and pretty well-defined rules of trading and investing that I personally follow. Now, I'll quickly show you the account and then talk about it. So let's just dive right into it really quickly. I'm down $3,000 or so because of the recent drop in the tech big names, and I have Apple, so that's hit me quite hard. I've also started to reduce almost completely my silver and gold position as it's enjoyed a really nice run up. As you can see, I still have 200 shares of EXK that will be selling soon. They're already pre-sold through call options. But I'm probably going to keep my wheat and precious metals position alive. I've sold out the last of my SIL, which is a silver mining company's ETF, or an exchange traded fund. Wheat and precious metals is up about 5% today. It's enjoyed a rather impressive run here this year. It's up like 96%. This is the 5-year chart. So up until, the bottom of March was at 24, now it's at 53. And it didn't really drop that much either. So I'm probably going to keep some of these shares until much higher, but I might sell 10, 20, 30, or 40, or even all of them if this rally gets a little bit out of hand for the precious metals. These are my option positions, and as always, you can always pause your video and review each option positions in itself. So this is the symbol of the security held, or gambled on, traded, whatever you want to call it. This is the strike price of the option. This is the expiration date and the number of contracts and whether it's a sell or a buy. So from this information here, you can extrapolate all that you would need about my position, and that in combination with all of my regular holdings. There's about 41 option plays over here, and I have a lot less holdings now than option plays. These are all my holdings here. I'm impressed by O's resilience, realty income, in which I plan on putting a rather substantial mass of money into. So hopefully that works out for me. I'm trying to get into the Russian market, RSX, and that's been proven pretty difficult. And then uranium, I'm sticking with for quite some time. Chemical, it's going to be pretty soon sold out due to call options if it keeps flirting with the $12 mark or even higher. And then these are in the rest of my positions here. A lot of these positions have call options sold against them. In fact, almost all of them. So what you see here might be a little bit deceiving. You have to pair it up with the option calls that you saw earlier to find out my true position here. I do sell a lot of call options and a lot of put options, and so that can get a little bit confusing as to exactly what's going on in the account. For the same very reason, when I show you this tab over here, it will not reflect reality very accurately when it comes to my account. It says here I have $10,000 cash and $86,000 or so of options and stocks, but that's actually not the case entirely. It doesn't really sell the full picture. I'm a little bit levered at the moment, tiny bit, but to the up and down side. I'm not going to spend much time explaining it. I really want to get into the topic of today because I don't want to make this a really long video. So what I've prepared here, the 4 rules that I tend to follow. Most recently, in fact, the last video I made, I had broken one of my rules, and I was expressing my disappointment to that about not shorting Halo companies, and Tesla is a Halo company, and so I spent the video discussing that. But today, due to a comment, I am going to make a video about the rules that I do follow. Now, before I get into it, these rules are highly subjective. Okay, so my rules are not and should not be the same as yours. So you have a different temperament when dealing with stocks. Maybe you're a day trader. Maybe you're an investor of some sort, like long-term investor. Maybe you're a dividend investor. Okay, maybe you do something else. So the rules that you're going to develop for yourself are going to be totally different. So don't be tricked into like following my rules and then expect good results on your end. That's not to guarantee that I'm going to get good results even with my own rules. But just out of interest, and maybe as a template to someone else, to another investor, what I like to do when I invest and what I try to guard against, these are my rules. Sounded pretty dramatic. Here are my rules of trading. Number one is ability to sleep at night. So what do I mean by that, ability to sleep at night? Well, it's more to speak to, it speaks more to risk tolerance. So if you are uneasy with the amount of risk that you're taking on a specific position, so let's say I was uneasy with the amount of risk I was taking, even though the reward was great and the risk was small, I was uneasy with that small risk that I was taking on the Tesla trade, and so I unwound the trade. I got rid of it. Okay? So the ability to sleep at night is actually one of my rules. So I didn't want to contradict two of my rules there, right? If I held on to my Tesla position, I would have been contradicting this one. So I decided to correct things, course correct. So ability to sleep at night. So for example, if you have all your money and you have, let's say, $10,000 and you have them all in Tesla call options that you bought based on earnings expectation, and you don't feel comfortable about the risk that you're taking, because if something happens, even if they miss earnings, it's not a guarantee. Even if they make earnings, it's not a guarantee that the stock will pop up further, right? So you're taking a big risk with your $10,000. It's more likely that you're going to lose them than double them or triple them or take any gains whatsoever. So if you're not able to sleep at night, knowing that that's how much risk you're taking in the market, because these are like your hard-earned $10,000 of making caramel macchiatos or Ubering or whatever else you're doing during the daytime, I mean, that's going to really sting, okay? It's going to really sting. So you have to be okay with your risk tolerance. If you're not okay with that, if you just want to sit in cash and bonds and have like 5% market exposure because you're just a conservative type of person, great. And you should discuss risk with probably a professional. Maybe not if you have small amounts. Maybe you should just look at YouTube and try to learn from there. But if you have a larger amount of money, you should definitely speak with a professional to kind of assess the risk of your account and move on from there. Okay. Rule number 2, know what you're trading. So I've gotten burned there too. I've taken on trades, especially option trades, on companies that I'm not very familiar with. And the thing with that is, if you don't know much about the company, even if you guess the direction right, when do you exit? When do you think when is the company overvalued? Does it have prospects for exponential growth, right? Or exponential spiral downwards into bankruptcy? Like, you don't know anything. If you don't know anything about the company, your sizing is going to be off. Your expectations are going to be off. And ultimately, you're going to lose all of your money. Or if you do gain something, it's not going to be nearly as much gain as you could have had, right? So, many people, even if you did buy, let's say, some of these big companies, and you think 10-20%, like Apple, for example, you think 10-20% gain is huge. If you don't know much about Apple, then you're likely to sell out, right? You sell all your shares, and here you are stuck with 10-20% extra dollars, and that's great, but you missed out on another 80%, let's say. Okay, so now what are you going to do with that cash that's just sitting in your account? You have to invest it in something else. And that's something else. The best option might be to buy your shares right back and to buy an overpriced company. So that's always a risk. And if you don't know what you're trading, if you don't know what you're buying or investing or gambling on, then that's a big problem. So therefore, because of personal experience, that's one of my rules. Number 3, I don't short halo companies. You saw me break that rule, right? What is a halo company? Briefly, well, a halo company, I've explained many times, is a company that has a divine-like guiding figure, usually in charge of the company, that is perceived to do no wrong, hence the halo, when it comes to running their company. So a figure like that is Jeff Bezos. A figure like that is Jamie Dimon. A figure like that is Jack Dorsey, I'd figure like that is Elon Musk, right? So it borders on religious, basically. It's like, okay, yeah, I know that the company's in trouble, but because this guy is so good and so powerful and so tricky and knows how to maneuver through the world successfully, and I believe in that, I will put my backing, right? I will take my next paycheck and put it into Tesla. I will take my next paycheck and buy some more Twitter because the company isn't going anywhere, or Square, or whatever, or Amazon. Just Steve Jobs used to be that way. I don't think Tim Cook is the same type of figure for Apple, so I feel more comfortable getting in and out of Apple more freely. Okay, now next point. Oh, if you have more examples of Halo companies, list them down. I'd like to see what you think are Halo companies. Now the fourth rule is to be between 55 and 95% long, but with leverage 195% long. Let's just put it that way. So what does that mean between 55% long and 195% long? Well, at any given time, I try to structure my portfolio to be net bull. So I could be 55% bullish on some things, right? So let's say right now I would probably be and have been, bullish on precious metals and tech. But that's not my full 55%. But I'm just giving you an example. So let's say I'm bullish on tech, precious metals, emerging markets, okay? And let's say I'm bullish on like oil, leisure and recreation stocks, and healthcare or whatever. Doesn't matter. And then my total short positions should not, I'm trying not to, make them exceed 45% of my account. So I want my bullish positions to always outweigh the bearish positions. And the reasoning for that is very complicated. It's very complex. Part of it has to do with money printing and natural rate of inflation. Part of it has to do with technological advancements and the compounding progress companies get from that. Part of it has to do with just tendencies of the market to over the last 100 plus however many years just to go up, with the winners getting stronger and stronger. And so I don't want to go against the general markets for very long anyway, but even if I do go against them, I'll try to be no more than 45%. And the reason I do that is because personally, I've lost in the past because I've made that mistake of going net bear and I've gotten burned. No matter how obvious it looks, okay, it's gonna hurt your account or my account. It has hurt me, and it will hurt me in the future if I do it. If I try to flip the tables on myself and screw that ratio up. So these are my rules. Hopefully it serves as a bit of a template for you as an investor to help you figure out what your rules are. And take it from me, my advice is to not copy other people's rules. You'll hear great investors telling you how they invest, what they're looking for, like I don't know, Charlie Munger's, has some rules about not needing more than 3 companies or something like that. That's just an example. I'm not saying that's one of his rules, but I'm just telling you, even if you have famous figures telling you what their personal rules are, doesn't mean that you'll be most successfully following their rules. I think you'll be most successful following your rules. All right, and with that said, get working, develop your own side of things, and if you can think of some interesting Halo companies, I want to hear about it just for fun and kicks and giggles. All right, I'm going to end it right here. Hopefully you're making more money than me out there. I've had a rough couple of days, down $3,000. It's not too bad, but it's all right. And I'll probably make another video on Monday. All right, peace out.